Hello. Another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So it's a brand new day. We have quite a number of events that we will be expecting in the markets. So we are just entering the London session, and there's a lot more that will be coming our way in the markets. So first things first, yesterday was a summer bank holiday. All banks in the UK were closed. So we had minimal trading volume during the London session. And of course, even in the New York session, we didn't have much, as we didn't have any incoming data. As a result of that, we had a slow, quiet markets. We didn't have any major opportunities. However, today, it seems like a good day for volatility to get back in the markets, and these would present some nice trading opportunities. So let's get this started. I'll be starting with the economic calendar, trying to establish the kind of data we'll be expecting for the day, as well as through tomorrow morning. So I'll be using the Forex factory economic calendar. So as you can see from early morning, we didn't have any major news. BRC shop index for the shop price index for the UK came in at 6.9%, way lower than the previous reading of 7.6%. Then there was unemployment rate data from Japan, which came in higher at 2.7%, compared to the previous reading of 2.5%. Then we had the German GfK consumer climate came in at negative 25.5, still worse than the expectation as well as the previous reading. And now we just got the RBA governor designate Bullock issue a speech. That was at 10:40 a.m. I haven't checked that out yet. And now we have the S&P Composite 20 housing price index for the US coming up at 4 p.m. So this will be very important because our housing market has been quite a sensitive topic over this quarter. So investors will be trying to understand the direction and trend of housing prices in the US. So we also get the housing price index at the same time. And then later on at 5 p.m., we will be getting the CB Consumer Confidence Survey. And this will be happening at 5 p.m. before we look at the JOLTS job openings. So the JOLTS job openings is basically the number of jobs being advertised in the US. So when you track this data, you're able to tell about the oncoming labor trends. So there will be more employment data coming in for the week. For instance, tomorrow, we'll be looking at the ADP non-farm employment change. Then on Thursday, we look at the unemployment claims before we look at the official non-farm payrolls data on Friday at 3:30 p.m. So being the NFP week, that remains a key focus. That is the labor market developments in the US. So besides these, it's important that we reflect on what happened last week. On one side, we had the the Jackson Hole Symposium, where the Fed Chair Powell presented a very important speech for the markets. So on one side, he basically mentioned that they are navigating the stars under cloudy, under heavy clouds. So when you have heavy clouds and you are trying to navigate the star, then you don't really understand what you are navigating because you can't see it. So what he was basically implying is that they're trying to control inflation, but the way they do it is using interest rates, which have a lagging effect on the economy. So it's not like they hike interest rates today and then prices come down the following day. So there's an indefinite period where the hike in interest rates starts to take a toll on the economy. So the problem with this approach is if they keep on hiking interest rates, they could find that they have over-tightened the economy, and that would be too late because it would lead to an outcome basically described as hard landing, which is basically a good word for an economic crash. So they don't want that to happen by over-tightening policy. So on the other hand, he noted that they have adopted what we call a data-dependent approach, where every meeting they sit and they're looking to make a decision about the economy, they will be considering the data that has come up for the US economy between their last meeting and their present one. So for the September meeting, they'll be looking at the data they have seen since their last meeting in July. So in between, we have had a couple of economic reports One of them being a very strong GDP. So we'll be getting another GDP data reading later in the week, and that will be on Wednesday, that is tomorrow, at 3:30 p.m. You can see there's a preliminary GDP data coming up. So he'll be looking at inflation. Of course, the last reading of inflation in August showed a very strong spike higher, where inflation moved from 3.0% to 3.2%. For the first time, inflation went higher in the last 12 months. So when you see inflation rising higher, labor market conditions remaining tighter, retail sales jumped higher. It was quite a huge number. I think it was 1% and 0.7% and 1% for core retail sales. So that's indicative of a very strong and healthy US consumer. And now when you look at the GDP and other data points, then it creates this belief that the US economy is very strong, job market is currently very tight, and that basically adds more pressure to the inflation curve. So when consumers generally have more money, they are buying more stuff from the retail sales data, there are more people who are employed, then you expect that the money they are creating or the value they are creating will end up pushing, increasing the upward pressure on prices, which makes the inflation problem worse. So as a result of this, the Jerome Powell is looking to make another interest rate hike unless we get sufficiently convincing data showing that the economy or the US economy is slowing down. So that's why now every time there is a major news announcement about the US economy, investors are reacting to that information instantly, mainly because it has the potential to change the decision of what the Fed may go for on its next meeting later this month. So when you check the CME FedWatch tool, which basically tracks Fed futures, you'll notice that there's a significant change from what we were looking at a couple of weeks ago. So 2 weeks ago, we saw 9% low. This went up to 13.5% a week ago. And then after the speech at Jackson Hole Symposium, you can see that this number has now risen to 21.5%. So as we get more and more data this week, there's a probability that this number will keep on rising. And if it rises, it basically increases the likelihood that the Fed may go for a 25 basis point hike from this range of 5.25 to 5.50 to this other range of 5.50 to 5.75%. So with this in mind, now we know how to react to the information. So if it's information showing a strong and healthy US economy, then we know that the Fed may go for a rate hike, which would be positive for the dollar. So if it's information showing weakness in the US economy, weakness in the job market, then it increases the odds that the Fed may hold rates level at the current rate, and that should be negative for the dollar or weakening the dollar. So knowing this and looking at the data in the economic calendar today, we know that there are key number of indicators. So for housing prices, the Fed is looking to lower them. So it's not looking at the housing market being in a bubble and being way overpriced. So for the Fed chair, he's looking to have housing prices dropping. So if they are dropping, that's consistent with what the Fed wants to achieve. Then in that case, it would be negative for the dollar. But then higher housing prices would be positive for the dollar. Then consumer confidence survey. So Jerome Powell wants the consumer confidence to slow down, because when people are more confident about the economy, about their tomorrow's income, they tend to spend more, which basically aggravates the inflation situation. So in this case, high confidence in the economy would basically mean that Jerome Powell goes for a rate hike, and in that case, it would be positive for the dollar. Then for JOLTS job openings, you need to see more job openings increasing. So a rise in job openings would basically mean that the economy is strong and companies are expanding and creating new jobs. So as a result of that, the Fed may go for a rate hike. And as a result of these, we could be seeing a stronger dollar. So on the other hand, if JOLTS job openings are surprisingly low, then that would mean that the economy is not expanding as fast, and it's going according to Fed's expectations. So as a result of that, we could be seeing Fed pausing rates, which would be negative for the dollar. So knowing that, I hope you'll be able to establish the right direction in the markets. So remember, when you're trading, knowing the impact of the dollar, we know that if the news comes in positive for the dollar, as according to my explanation before, then we should be finding a weaker currency to trade against it. An example, I've been saying the Japanese yen has been pretty weak. So as you can see, since yesterday was a very slow day, we didn't have much happening. If you look at the difference between the high and the low of day, it was significantly small, meaning that there was extremely low volatility in the market. So the market basically traded sideways, and I think we had discussed this yesterday. So I remember plotting these two trend lines in the morning, showing that the market may not move much. It may remain within those two trend lines. Though we have some instances that the market went off the trend line to the upper side and here to the lower side, we have relatively remained the same level. But what we are seeing here is an expansion of the range. So if you use yesterday's high and yesterday's low as the key parameters for trading today, then this would be our limits. So this is the lowest price yesterday. The highest price yesterday was here, and now the market is just trading here. So when you get some news fueling activity in the markets, so if it's for a strong dollar, then we expect this particular resistance to be broken and the price to continue trading higher. So this is a key level. It's very important. So if you zoom out, you notice that the last time the market was here was all the way back in November last year. So now, if price manages to break higher, the next immediate resistance is at 148.48. So there is some still good room for another leg upwards, and that could be starting later in the day or in the afternoon. So on the other hand, if it's weakening for the dollar, then we could be seeing the market drop back downwards. And if we have a very strong trend, then all the way down to 145 might be a nice target here, the 145 area. Of course, in the short run, we could also be looking at Friday's low. So Friday's low was all the way down here. So 145.7 is the short-term target. And that is if the market breaks this level and keeps going down. So that's the expectation for USD JPY with more buyers on the upside, but this depends on the outcome of the news. So as for the dollar index, it remains pretty stable yesterday. Nothing much of a movement, opening down and then up and then down. Then today, opening down and then moving up. So to me, this still feels like a sideways momentum, and we don't have much market activity yet. So a lot of direction and momentum in the market might be achieved during the New York session once we have some news fueling activity in the markets. So looking at the pound USD, yesterday we did an analysis on the same. So we mentioned that the market had been moving sideways for 4 weeks, broke towards the end of last week and retested that particular rectangle. So this is the breakout, retest, movement, and then down. So yesterday we mentioned that we might be seeing the market oscillating around here. We got back to this area, the breaking point, retested, and now we still don't have a direction. Though the price action is indicating a rejection of higher prices from the last couple of candlesticks, we still don't have news influencing market activity. And I suspect that the market could be playing within the same level and perhaps even retesting yesterday's low. So remember, the market has broken yesterday's high, failed to move higher. In the last couple of hours, it has been moving back downwards. So we could be seeing the market playing around this area, and potentially, maybe on the short run, we could be seeing the market retesting this trend line. That is appearing to be forming on the 15-minute chart, which is showing some level of support around this area. So potentially, the market could be headed right here. And this is not much of a momentum, this 15-minute chart. So I want the big move personally. So if there's a big move, then that would make sense for me. And I believe that would happen after we have some news fueling market activity. So for Euro USD, it was pretty much the same thing. So I mentioned from the forward chart that we have a pretty strong support here, judging from the bearish momentum here, the falling wedge, and the strong support level that appears on this area here. So noticing this particular support here and the way the market was acting before it got to that level, you can see two trend lines approaching each other, which basically implies a falling wedge. And then once the market gets to the lower trend line, finds support, and now has been struggling to rise. So from the 1 hour chart, you can see a very strong support happening on Friday. Monday, nothing much happening. Today we started by attempting to go up and then moving back downwards. And now it's not easy to tell that this market is, let's say, moving up or down. So what we are seeing is a continuation of this particular wedge. So if I zoom out, you'll notice how the wedge has been playing out, but then this could be adjusted to accommodate the new highs. So I think this is the overall movement in the Euro USD. So from this, you can easily tell that the market went up, it's moving back downwards, but this particular trend line remains a key focal point. So right now, as the Euro USD moves back downwards, 1.07893 seems like a nice target, but then the overall momentum is expected in the afternoon once we get the news from the US. So as for USD CAD, same thing, sideways momentum. So there are times when there will be opportunities and things will be happening in the markets. And there are times when nothing happens, like yesterday. Price moving just up and down, nothing much. And of course, even for this one, we're waiting for some fuel to be coming up from the retest announcement. So there is a good chance we'll be seeing some key level breakouts. And for USD CAD right now, if you go to your 50-minute chart, then this is the sideways momentum that we have. So either a breakout to the upper side, we go long, or a breakout to the lower side, we go short. So for gold, it continued with the bullish momentum yesterday. So remember, we mentioned that gold is quite bullish after having a couple of weeks where it was extremely bearish. So if you focus on these, you'll notice that there was like 5 weeks when gold was extremely bearish, and then we had a very strong bullish week last week. So this momentum is expected to continue in the rhythm of a swing, where the market moves in swings, an upswing, a downswing, and now we are on the upswing. So we could be seeing a second consecutive week of bullish prices on gold. But then also this also is dependent on the news we'll be expecting in the afternoon, because if it happens to strengthen the dollar, then gold could be headed further back downwards, maybe even towards the 1900 level. So the most recent support was seen 2 days ago, that is on Friday last week. So in this case, we are looking at the price pressure going back to test the Friday's low, which is basically 1903, slightly above the 1900 price level. So on the other hand, weaker dollar would mean that there's a high possibility that gold rises to 1929, and if it breaches that level, then continues even moving higher. So from this level, we could be seeing the market going for 1929, and if it breaches, then 1954 comes in sight. So for Audi USD, we happen to break this channel. I remember watching this. So market oscillating up and down, eventually breaks, retests, moves downwards, retests the area again, moves downwards, and now we have yet another retest. So it's synonymous to a market that is just consolidating with a slight bullish bias. So from here, if you look at Friday's low and you compare with yesterday's low, you notice that the market is remaining within these limits, and these are the trend line, which is basically a rising wedge. So at some point, we'll be expecting the market to break either of these, and I believe this will be some form of fireworks happening during the New York session. So it's a wait and see kind of scenario. Market gets back into this channel, we go long, and if it goes back downwards, breaks this area, then it might imply that now we go for a short selling position. So for US equities, they are continuing the recovery after the big sell-off on Thursday last week. So on Friday, another sell-off followed by a recovery. Yesterday, a very strong struggle attempting to go up but failing each time. And now today we have some similar price action. But then from the forward chart, we very much know that we are trading on the lower side of this particular major trend line. So that the market happened to break that trend line, it has consistently been moving back downwards. We had a very strong week last week, leading to the announcement of NVIDIA earnings, and then a very sharp drop towards the end of the week. And now you can see the recovery here, but nevertheless, I'm expecting some further downside momentum. So from the 1 hour chart, you can see the way the market was testing this resistance, failed to break, and then eventually broke early this morning. Now it has pulled back downwards, but from what we are seeing from the 1 hour chart, it seems like an entry by sellers, and this could be the genesis for some bearish momentum. So I don't know how it will play out. I think there's a good chance we'll be seeing the market pulling back, perhaps even retesting yesterday's low at around 14,995. So as for the Dow Jones, it's the same thing. The market making an impressive move upwards yesterday. Today, the market does the same thing, but in this case, you can see a strong rejection of that level, potentially implying that the price could move further back downwards. So remember, yesterday in the morning, we were monitoring this sideways momentum, and we mentioned that if there's a break upwards, we go long. If there's a break downwards, we go short. So it happened to be on the upper side, so presenting a buying opportunity. But now this has already happened. Market rejected resistance and is now moving back downwards, basically implying that prices could move lower. So from the H1 chart, this is how it looks like. So it's not just the resistance here. There's also resistance here as well as here. So the Dow Jones could be finding a resistance here and moving further back downwards. So as for the US 500, which is basically the S&P 500, we expected some bullish momentum last week. We went all the way to the breaking point. So this coincides with the point at which the market broke the trend line. So if you move a notch higher, this is the 4-hour chart, you'll notice that that was the trend line supporting the market for quite a period of time. So once the trend line was broken, the market went up, retested the area before moving back downwards. And now from Friday evening, made a recovery. Yesterday, some further momentum upwards. Today, another momentum upwards. So yesterday, I had mentioned that from this area, if there's a break higher, we go long. If there's a break lower, we go short. So managed to break higher, retested twice before moving higher. And now the price action we are seeing as we enter into the London session is a big sell-off, raising the earlier gains, which basically implies that prices may continue moving down lower. So as for Brent oil, this is what we are seeing. So yesterday, I anticipated that after seeing these 3 candlesticks indicating a rejection of lower prices, I expected that we would be seeing some price momentum to $85.414 dollars per barrel. However, we had a nice big jump here, which faced a sell-off immediately. And then the market kept quiet around this area up until the last 1 hour. So besides this one green candlestick, this is the most market activity we have seen since then. And this basically implies that the idea of going long after seeing these 3 rejection of lower prices, it basically implies that we could be headed much higher for oil prices, and the potential for a short-term entry would be targeting the $85.414 dollars per barrel. So as for European equities, yesterday, they were pretty bullish. They continued rising. But then in the last 1 hour, you can see the strong reversal here, indicating a rejection of higher prices. And this is for the French 40 index on the 1-hour chart. So after getting to this resistance, the market was unable to break, closed down lower, and it could be headed further back downwards. So you can all see how the market was playing around with this last week's high or last week's resistance. So there's a good chance you could be seeing the market pulling back downwards. So for the Euro 50, it's similar with the French 40. So this is our resistance. I'll be using this area here. So these are high right here. So market failed to break the same level here. And now after attempting to break here, you can see the strong entry by sellers, which could play out the same way it did last time. So the last time the market was here, this is what it did. Short up, you can see the shooting star candlestick here, and then immediately prices went down. So if this plays out here, then the target is the previous low around this area here, which is basically around 42.15. So we could be seeing a potential entry position for short selling opportunity targeting this area with the stop loss just above the previous high, and this is the highest point, so slightly higher than this. So as for the UK 100 index, it remains in this bullish channel. So it has just broken as the Londoners resume markets. So remember yesterday, they were on a break, not participating in the market. So for the ones who are just joining, you can see the big break upwards, but then it also faces a handle because this area was acting as support and it could be holding some resistance in the markets. So despite the market moving higher, I'll be watching for a short selling opportunity if I see evidence of sellers entering the market. So we can already see that in the last 1 hour candlestick, there was a big tail towards the upper side, which basically indicated some rejection of higher prices. So if we have a close, let's say this current candlestick crosses in the red, then that would present a short selling opportunity, but that has not happened yet. So the idea is not valid yet. So it's a wait and see kind of a scenario. So that being said, other assets remain sideways, like Bitcoin is moving sideways. Nothing much is happening. USD CNH is basically moving sideways. So I remember drawing this channel here. So the market was moving up, broke to the upper side, and then went back. And from there, all we are seeing for the USD CNH is basically a consolidation in this pair. So if I was to draw some new trend lines here, I believe they would be taking this shape. So monitoring this high and this high and this high. And then for the lows, they don't seem that consistent, but there is something we can generate from this, especially when you consider this tail here. When you consider this bottom here. And of course, we have this other bottom here. So I think this is a very strong basis for the lower trend line. And then there's the lowest price here. So clearly, the market is on an upswing and it's attempting to break this particular trend line. So if it doesn't break, then the idea remains to go for a short selling position, targeting that the market would go back to this trend line. But then if there's a break, then it would present a very nice opportunity to go along and target the base of the pattern or the top here, which is basically 7.34567. So a very interesting area to look for shorts, a long position on USD CNH if the market happens to break this particular trend line towards the upper side. So that's it for the day. Thank you very much, guys. Thank you for your time. Let me check if there's any questions so that I can respond to them. Hello, Sketcher. I can see Kevin, Francis, Lemuel, and John. Thank you guys for joining the session. Good morning, Wanjiko Ganju, Kazadi, can see Charles and J Squad. So gold and pound USD seems to be range bound. Is it prudent to wait for us to wait for clear signals after the reports on jobs at 5 p.m.? Yes, I think it's prudent. Like we don't have anything happening in the markets that could fuel momentum in a particular direction. So that's why we had a sideways momentum, and of course, considering the bank holiday in the UK. So it was almost a holiday on the entire economic calendar because we didn't have any major economic news. So hello, Mercy. Can see Kevo. A lot of Kevins today. Kevin Aboma. What is your outlook on the dollar index, both short-term and long-term outlook? I think I've explained the same at the beginning of the session when I talked about Jerome Powell's speech at the Jackson Hole Symposium. So the dollar outlook is highly dependent on the data. So on the short run, we are following the data closely because if it's weighed up to showing a strong US economy, strong housing market, and strong job market, then that's indicative of further Fed tightening, which would be more bullish for the dollar on the short run. And of course, we also know that if the US economy starts weakening, then the Fed might consider holding rates and potentially cutting rates mid next year. So in that case, it would mean a weaker dollar. Right now, everything points to a stronger dollar, especially from the data we already have right now. So a very good question from Apollo. Please clear 2 minutes for me. Trading when month is ending is time retail investors get chopped. No, I I highly disagree with that. When you're trading, I don't think it has any correlation with what time of the month it is. I think majority of the participation in the market is surrounding when there is news announcements, because these news announcements tend to align a lot of traders in one particular direction. So if it's a positive news pertaining to a certain asset, that's when you'll be seeing most of the momentum. And I believe you can study this with what happened with our NVIDIA shares. So a lot of momentum surrounding the earnings announcement. So whenever there's huge news being presented in the markets, then this brings out of volatility. So it's not about the time of the month, but rather the timing of events in the economic calendar that cause momentum in the markets. And that basically creates a lot of opportunities. But we all know that it's a high risk, high reward market. So wherever there is opportunities, there is risks, and wherever there is risks, there's also opportunities. So it's during those periods that you'll find a lot of retail investors will be making a lot of money, and they also be losing a lot of money. So a day like yesterday, when there was no much momentum, it doesn't matter whether you had a buy or a sell position on, let's say, Euro USD, because the market didn't move much. So in that case, you don't see a lot of retail investors' accounts being affected. For the second one, June to August period is the period to trade Forex. Is there a basis for the two? No, there's no basis. The only month I would say is not very good for Forex is December, when a majority of market participants take their leave, they take their profits and move, and they only resume right after Christmas, when we basically trade the Santa rally. A suggestion, is it viable to add another 4 p.m. class Monday through Friday? No, I don't think it is. We have a 4 p.m. class on Tuesday. We also have evening classes. I have an evening class on Thursday, and we also do other classes. It's not just this market snapshot series. We have other series running concurrently. So kindly check the FX Pesa YouTube, and you'll find a record of sessions that happen each and every day, and hopefully you'll get value from that. So in addition, I'm requesting everyone who hasn't subscribed to the FX Pesa YouTube channel to please do so that you can get notifications whenever there's a live class happening. What's your view on trading options, and how do they influence the markets when the options are expiring? So when the options are expiring, it basically means that there are positions that are moving out of the money. They are becoming worthless. So options are a real threat because they need to be covered. So when there's a lot of options that are expiring, it depends on whether they are bullish or bearish, whether they are what we call options or put options. And in that case, if they are call options and they're expiring, then basically means that these guys can't buy in the markets, which basically means the sellers prevail. And the opposite is also true. London Open is described as key zone where most traders make more money. What is your view on that? So majority of traders are usually asleep when the Asian session is happening. So when they wake up, it's the Londoners who will be joining the market first. So when this happens, it basically brings out of opportunities in the markets. And this is when we are processing what happened in the previous session, and we are getting news announcements early in the morning, especially for the UK and the Eurozone, and this causes volatility. So we also have like very big banks with very high liquidity in the European region. So when they're active in the markets, then they bring in volatility too. A book on trading psychology, please check on Trading in the Zone by Mark Douglas. I always recommend this book. Maybe I should pin it somewhere. How do we trade the non-farm payrolls on Friday? I think I've already explained that early in the session. So kindly go back through the session and you'll understand. I've already explained it. Please explain this. Gold futures margin change effective August 25, 2023. Our gold futures margin requirements will rise from 0.5 to 2%. fixed MT5 margins also shift to 2%. So this doesn't affect how your trade functions. What it affects is the margin that you'll be required to provide in order for you to execute a trade. So you'll be required slightly higher margin than previously. And this basically means that you'll be taking less leverage. A very good comment from Casey. What are your social medias links? So I'm majorly on Twitter, and my link is Rufas KE. So if you find Rufas KE, it's a verified account, then that's where I post a majority of my content. Any new bullish banter? I didn't find the one you mentioned was released last week. Yes, last week we released a bullish banter podcast, and we were answering questions that you guys have been asking. And tomorrow, which is Wednesday, we have a very interesting session that is coming up where we interviewed a Kenyan trader who has advanced his trading career and now is trading options in the US. So it's a leak, I would say a spoiler, but hopefully once you join the session, it will be available on YouTube, Spotify, Google, and Apple Podcasts. So hopefully everyone will get to benefit from that. Is there a book that can help understand fundamentals? I don't think so. Fundamentals is an ever-changing, it's an ever-changing field. So when you study one thing, the market conditions can change, and you find that things are acting differently. For instance, all those books that had been written about economic fundamentals, majority of them has been nullified because we had the unprecedented pandemic, which was not there in history, unprecedented printing of money during COVID period, and now we are looking at completely different dynamics. So I would advise maybe you check out podcasts, which are much more updated and presented by professionals. So thank you guys, and I hope to see you on the next one.